about the silver market and 20-inch snowstorms that he can't wait to get started. So with that said, Dave, why don't you take it on over and introduce the show?
What? Hi, it's Arcadia Economics. It's Chris's show. He can introduce it.
Okay, we'll do like a couple reps on that. I think you could get there. I mean, it's, a good start. Dave, welcome on in. I like how you improv there. That was not planned. Dave Kranzler, Investment Research Dynamics. Big hand for Dave, everybody.
Oh, stop.
Rob and Chris, no hand for Dave. All right. Well, I'm happy you're here. And I think the crowd sounds excited that Dave is here. We were talking on Twitter about a silver tennis racket as one of the future products in the Arcadia store, maybe signed and engraved by Dave Kranzler.
Oh, I got one. See?
Oh, no, I mean the real thing, baby. Like swinging around there in your match. But also joining us today on this important discussion of silver tennis rackets is Chris Marchese of silverseekandothers.com. Chris, how are you today, sir?
Pretty good. 5 there, right?
Yeah, well, there is the spirit. I like it. Sounds like you sound like a silver investor. It's authentic, so that is perfect. And Rob Kientz, how are you today, my friend?
I couldn't be better, Chris.
Well, that's also exciting news. Great to have you here. Well done calling out some of the nonsense in the silver world on your channel there, Rob. I think everybody is grateful for that. And since Dave, would you like to show us your coin again? Because I have some silver. I had a big order come in my.
You want to see that one?
I'll share.
Or you want to see this one?
Is that you on the tennis bar though? Or did they like make?
It's not me. No, it's not me.
Oh, no, we want the Kranzler. I want Agassi or something. Check this baby out. My new Atlas silver coin.
Nice.
Very nice.
Which I made a video. I don't know if people thought I was joking when I made that video cleaning out the shelves of all sorts of stuff like this from COMEX a couple weeks ago. But I mean, the things that they sent yesterday are incredibly beautiful. Here is the here's the Uranus, nice blue, and they're all like 2 or 3 ounces. So anybody else has some silver they'd like to share during our show, you're welcome to do so, and maybe I'll pull a few more up. But with that said, had another wild week of trading. So let us dig into all of the market talk. Enough silver there, silver boy. Let's get to it. Dave, how about you lead it off with what the heck is going on in the bond market? I see these CNBC headlines are saying, well, the rates are going up because they think Powell's going to raise rates soon. I don't think that's what's going on here, but what do you think, Dave?
Wait, who said that?
Read CNBC. They write these articles. They're like, bond yields are up today. The market's really pricing in that Jerome's going to hike in the fall. I was like, I don't think that's why these rates are going up right now.
I thought it was because of crazy economic growth.
And then, of course, once the rates go up because people are fleeing out of the bond market, you see those articles saying, well, gold's selling off because you can't. I mean, there's a real yield on treasuries. I'm like, you're seeing the Ponzi scheme collapse now. I don't know if that's why they're buying, but
I thought at his last press conference or something, he said he wasn't going to be raising rates till at least 2023.
That's what I remember too, and I didn't.
I bet you he doesn't raise rates in 2023. Let's if you want to make that bet, I'll bet that. I'll put this guy up. It's a 10 ouncer.
How about we flip sides and I'll give you 10-1 odds.
So I mean,
I'll go into 2024. And
what's that?
I'll give you the same bet, but
yeah. I agree. He's not going to raise it in 2024 either. We probably won't see rates ever be raised again by the Fed until there's a systemic reset of some sort.
Yeah, we won't see positive real interest rates.
Oh God, no. If you use a real inflation rate, the real rates are deeply negative right now.
Yeah, 6-7%.
At least.
9%.
Yeah, at least.
Although, Dave, you mentioned it there, which, for years it was like, all right, well, one day, and maybe we can talk about it and consider it seriously then. But are we not getting close to the point where it's like realistic to begin discussing what a reset would look like, whether it's coming? Because whether it's planned or market implemented, I mean, it seems like it's coming quicker than slower at this point. I think that's what the bond market is saying.
I don't know. I always thought China would be the one who forces a reset. I mean, they're accumulating just boatloads of physical gold commodities. They're they're converting their fiat dollars in their reserves into hard goods and real money. And you know what they say. I mean, he who controls the gold makes the rules. So that's and I don't have a time frame for that. I have no idea how long it's going to take. I mean,
well, Dave,
they play the long game, so
right.
They don't care about what we think about the price of gold and silver. I mean, they have the ability to juice the price of both much higher if they wanted to. Well, why would they do that? They're still accumulating.
Yeah. I mean, they have monetary imports and non-monetary imports. It's been a while, so I don't remember which one they don't go through customs, so they don't have to report. So obviously,
right, the Beijing, the gold that goes through Beijing doesn't get reported, and that's by design.
Yeah, so I mean, the numbers they say they have are ridiculous. I mean,
just like the numbers the U.S. says it has.
Yeah, because it has it.
Well, a lot of what the U.S. used to have is probably sitting in China now. So
that's probably true too. Or being worn around in India. Indian brides are wearing it.
Right.
Dave, here's my question though. At some point, we're going to get to the point where China can't keep accumulating, right? I'm not asking you if it's today or next year, but just yes or no, are we going to get to that point eventually? Whether it takes 50 years, I mean, with the way we're headed, we're going to get to that point. Would you agree with that?
Eventually, yeah, for sure.
Do you think it's at least possible that based on what you've seen in the silver world over the last 2 months, that we could be very close to that point, at least in silver right now?
Why? I don't. You mean,
I'm not saying that
about it,
definitely
a reset of the system, or silver takes off?
Say that again, please.
Are you talking about a reset of the system, or were we at the point where silver's getting ready to take off again?
I'm saying not definitely, but based on what we've seen, is it at least possible that we're near the point where it's not possible to continue loading up on silver anymore? Whatever you think China may have been doing, and we'll leave gold aside for a second.
Oh, you're saying because there's a shortage of
I'm just saying that, I mean, I would imagine when the silver market has an issue, that's probably when we'd see something spread pretty quickly to the gold market. Not a guarantee, but
well, I'd make the case that the physical shortage in gold started showing up before silver, because that's what we saw that last March, right?
Mm-hmm.
And then the LBMA and the COMEX had to figure out a way to paper it over, and create an even more fractionalized bullion system. So, and honestly, I did a bunch of surfing around the big coin dealer websites, and it's harder to find gold bullion, sovereign minted bullion gold than it is silver. Most of the websites are completely out of gold eagles, and the ones that have them were selling them for like, I don't know, 180.
200. I saw on AppMix it was $200 today, Dave.
Okay, so it went up again from yesterday, because I think it was like 180 yesterday. So, and a lot of, all of the websites seem to have at least 2021 silver eagles in stock.
Yeah, but the premiums you have to pay are higher than percentage.
Oh yeah, the premiums, that's like $10. The premiums for silver right now are like 10, at least yesterday. They may be higher today.
So what is that, 30% premium? You don't see that in the gold
more than that.
No, never. I mean, I remember when 3 to 4% was considered pretty healthy and like a gold eagle.
Yeah.
That's a 38% premium on silver.
We have about $180 premium on gold Eagles.
That's
I
the
mean,
random
that's
year. I mean, I think if you want 2021s, it's probably 200.
maybe more. I don't know.
Oh,
No, it looks like
no, it's the same.
price on the
That's
2021.
interesting.
Yeah. Still, I think that's as high as I've ever seen it on any gold coin. At least since I've been investing.
I think you're right, Rob. Since I've been involved in this sector, I think you're right. And that used to be the premium on gold pandas back in, the 2005, 2003, 2004, 2005. That used to be, it was like 150 to $200 over spot for gold pandas, and now we're seeing it for eagles.
But what's interesting about the China thing is, I have a feeling they have a lot to do with what's going on in silver, because if you look at China, silver, they were the last one to go off a silver standard, to my knowledge, in 1930. Silver played a big role monetarily for them throughout history. In, 1450 to 1650, give or take 25 years on each. The GSR there was between 5 and 7 to 1. That might be all of Asia. I can't remember, but so I mean, they're just not saying anything. I wouldn't be surprised if they're buying it.
Yeah, I think all sovereigns are buying it. I think a lot of what JP Morgan does in the market is for the US government, perhaps many of the other governments, because they need it for robotics. They need it for the space race.
Well, solar also.
They need it for, all the networks that they're building for their technocratic, all their technocratic policies that they want to that they want to pass. It's on Nokia's website, by the way. They're building 5G out on the moon. They have a contract with the U.S. government to put 5G on the moon. So the space race is in full gear, and you can't run a space race without massive amounts of silver. I mean, absolutely massive amounts.
Now, Rob, would you say that it's also true that if Dave wants to keep up his Tesla driving lifestyle, that silver is also going to be required to fuel that?
That's right. Electric cars use just an inordinate amount of both copper and silver. So I think that's a large reason why you're also seeing that spread to copper. I think we got over $4. I don't know what it's at right now.
Over $4.
Yeah, it was over $4, which is, I don't know. It was 3 something, which was a 7-year high. $4 is probably like a 9 or 10-year high. So all of those metals used in technology, that you're seeing it, the increase in the middle class for China and India, but also all of the stuff they're doing to move their economies outward, up into the atmosphere, all of that, the rocket technology, the satellite technology. India produces so many satellites, it's ridiculous. They probably have launched more satellites than most of the other major nations combined over the last couple of years.
No kidding.
So it's a giant space race. Whoever can get the satellites up there and own the real estate, but that takes silver, it takes copper, it takes zinc, it takes a lot of those metals.
It's funny. Copper makes headlines. Oh, it's so in demand because it's a good conductor of electricity, right? But silver is so much better. It's the best conductor of heat and electricity of any metal, any element.
I think gold's actually better, but silver's cheaper, so that's why they use it.
Yeah.
Chris, based on what you've been seeing, obviously you have a long track record in silver. I mean, in addition to you've worked together personally with David Morgan, so quite a knowledge of the history. Do you think we're getting close to the break point in silver?
Yes, I do. What do you mean by breaking point? Like new all-time highs? Or?
Sure. Some sort of, I found it interesting. We heard Jeff Christian and Rick Rule mention a cash failure on the COMEX, which is worded in the contract. So whether it's that, a new all-time high above 50, I would say even breaking above 30, which it's interesting when you look back on the charts. It hasn't gone above 20 many times in history, let alone above 30. Something that makes the silver people happy, kind of like we got our month last July. However you want to define it.
I mean, if you look at the correlation between silver and gold, unless silver is squeezed on the physical side, which I believe it's showing signs of doing, but it's only the last ounce that matters. But once gold will start to move up, I think silver will breach 30. Once it does that, within 6 months, we'll probably be testing 50 or past 50, $60, $65 range before it comes back. So, I mean, I'm very excited about it.
Does 2021 finish with a silver price above or below $50?
I'm sticking with that call I made at your silver show last year.
Silverfest.
65 it will peak. I said it then. I'll stay it now. Why not?
Am I sensing that you're getting excited that Silverfest 2 is only 6 months away now? Is that what I'm picking up there, Chris? It's understandable. Dave, you look like you can't contain yourself over there. End of the year, is the price of silver above or below $50?
I don't know. I'm just
Don't say
excited.
something like it'll be
Silverfest 2
trading.
is, I don't know. I'm just excited. Silverfest 2 is 6 months away.
Well, that's a pretty good answer. I will take it. Rob,
I
Kientz,
stopped
Can you
putting-
pick up the slack for the old timer here?
Whoa. I stopped putting numbers on forecasts a long time ago because the market's so manipulated. But I'll go out on a limb and say at the end of 2021, the price of silver will be higher than it is right now.
Well, they don't call him the best color analyst in the game for nothing. Rob Kientz, is it even conceivably possible to add anything onto that in-depth, detailed analysis of exactly what's going to happen?
I think Dave's right. It is manipulated, so it's hard to call, and it just depends on how long they can do the manipulation. I do think at some point it breaks, and when the dam breaks, it's going to run straight up, and it'll run to levels we've never seen it before. As to when that happens, at the end of the day, we don't really know. I do think it's tied to Dave's earlier comments about the reset, however, because I think China and all these other nations are hoarding silver, gold, and some of the base metals as well for industry and the gold to recapitalize their central banks because of Basel rules. And when that breaks, it's all going to break. It's like the dam's going to break, the water comes and destroys the town. That really depends on when they do the reset. Now, the World Economic Forum has called the reset, but it goes in stages. As to how long, we don't really know. We don't have all of those plans of how they want to do all that stuff. But my subscribers have been asking me, and I said it won't. The big dam will break sometime 2023, 2024, probably the very, very latest. That's when you're going to see, at the very latest, the collapse and the reset really begin. Silver at the time could be easily trading at $50 an ounce, but there it could go to multiple hundreds of dollars an ounce.
Well, it's certainly going to be an interesting year and a lot to look forward to with Silverfest 2 right around the corner. Plus, one of my favorite things is how, I don't know if anybody else does this, but to me, it feels kind of like we're living in The Big Short Part 2. And I often equate what's happening just in my own mind to a different scene in the movie. This reminds me a lot of towards the end where the bonds start defaulting, yet because the banks were still getting their own short position on, they weren't marking it yet. And since we have this great new addition to the silver community that's making such powerful new content, we're going to watch one together here that just came out today that I think you're all going to love. So here we go. Dave, you can have me pause and make funny comments. COMEX delivery
Went up in the
SLV. Price collapses.
Unbelievable.
We know.
Unbelievable.
It's completely backwards.
I just called an old friend at Bear. He didn't even know what
SLV.
Yeah, I just had to wire Bear and Deutsche $70,000. It's like 2 + 2 = fish.
It's rigged. You bought into a rigged game? Gonna lose everything. I'm gonna have to move back in with my mom. Can't do that.
All right.
Silver squeeze.
Wait a minute. Hold on, Ben. Ben, look. Either the banks are clueless and they don't know how to value these,
SLV.
or there's such crooks that
SLV.
are worth shit and they're hiding it. I think we should buy more.
Silver.
What?
Suck it up and pay up, fellas. We made a deal.
No way. No.
Fucking kidding me? You come in
You're
here,
a
you
fuck-
fuck
how
up
do you
fucking
seriously
table
look
with
at
your
yourself
fucking
in the
no.
No.
Yeah.
No.
Cares how you said you would
Unbelievable.
mark
There is
credit
such a
loss
thing
event.
as
There would be a
drama.
principal
You
write down.
You're gonna
and
fucking
attention
get
selling
in your
will-
No.
No, but seriously.
Silver squeeze.
You got a matching little butler boy, you butt fuck.
Are you done?
Think so, yeah.
God, I pulled a muscle in my back from yelling.
COMEX delivery.
Have done nothing but go up. Yet
COMEX. Price collapses
on the
SLV.
please explain that to me. There's no way that makes sense. There's no way you're marking
Silver.
appropriately. I mean, why shouldn't we back out of this trade right now?
Didn't I say
CFTC.
the SEC and the big banks were clueless? Didn't I say that?
Yes, you
Didn't I say it?
Yes, you did. You did.
Shut up.
You did.
Now their foot's on fire. They think their steak is done and you're surprised?
That's not stupidity, that's fraud.
Tell me the difference between stupid and illegal and I'll have my wife's brother arrested.
That was fine.
I guess you just don't realize how clueless the system really is. Yes,
Back, Dave.
there's some shady shit going down, but trust me, it's fueled by stupidity. Look at yourselves. You know, you pass yourself off as cynical people, but you still have some faith in the system, don't you?
I don't.
Well, except for Vinny. And who gives a shit?
No way.
Look, either we're right or we're wrong in a giant way. And if we're wrong, then we gotta find someone to help us get out of this trade.
I'm not feeling remotely confident that we're right. And if we're wrong, who's gonna tell us? Who understands this stuff? It makes no sense.
I think we need to go to Vegas.
What's in Vegas?
Vegas.
What the hell's in Las Vegas?
The American Securitization Forum's there next week. Every bond and
Silver.
salesman, subprime lender,
Silver.
trader's gonna be there. I'm telling you, your bet is against dumb money. It's about time you find out just how dumb that money really is.
God, I hate Vegas.
I hear the food has gotten really good in Vegas. They have a Nobu now.
Would you fucking stop it?
So there you go, fellas. Dave, what do you think?
It's a great movie.
You gonna be able to play Dave Kranzler in the big silver short when we turn that into a movie?
Sure, absolutely.
And also, Dave, any comment on how I had the biggest stack in that film there? Even Eric Sprott looks a little jealous. He's like, "Well, look at this." So, Wall Street Silver, well done, fellas. Anyway, I thought that was fun, so wanted to play that. Rob, any thoughts on the video or otherwise in the silver or bond world?
I just thought it's funny how you kept saying silver during the episode. That's my favorite part. But the sound guy did a great job there.
Yeah. Apparently,
the
that's
bond
not
market's
the first time that's happened.
Yeah. The bond market's a total mess. I'm surprised the entire bond market's not under fire right now. I guess the 10-year is sort of the standard bearish. You're seeing it there first, but we saw it in the repo market. I did a video on that, I guess, last week sometime, maybe, how it was the 10-year is being shorted and it was affecting liquidity in the repo market. Now you see the rates rising. And who was it? Was that the financial managers had dumped the most ever? What was it, like 65 billion, or what was the number that they dumped in a week that came out? So yeah, the bond market's a mess right now.
I mean, the Fed's holding up the bond market right now is what it is. If the Fed stepped away and stopped buying treasuries for a couple of weeks, you'd see the 10-year rate go to 2% quickly, especially with all the new supply that's going to be coming to fund the $1.9 trillion spending bill. They just can't, that Capitol Hill just passed. And now they're talking about another one that's even bigger. So
2 to 4
and
trillion.
they're
on
already
infrastructure.
spending, the deficit spending is already what, a couple trillion right now. So I think it might even be more. So there's a lot of bond issuance coming. The Chinese aren't buying them. The Japanese, believe it or not, aren't buying them. So in my mind, the Fed's going to have to buy even more now, which means they're going to have to print even more money.
So what do you think is
If
going to
they
happen?
want to, if they want to keep a cap on rates.
Are we in that stage, Dave, where it's the end, where they have to buy everything and everybody else exits?
Right, exactly.
What do you think the Fed's going to do next week?
I think they've
I don't
already
know.
done it.
Haven't thought about it yet.
It's coming up, baby. Chris, you better, Dave, get your notebook out. Chris, have you thought about it yet?
Oh, I definitely think it. I think they've already started twisting the curve. They're not going to say so. Make it
Yeah,
look.
didn't you feel
I
some
agree with
funds
that.
protection team in there, or someone? I think it was Wednesday or Thursday where everything was getting clobbered again, and there was just, it wasn't even a U-turn. That was a V. It just like hit a brick wall and bounced the other way.
I'm sure that was the exchange stabilization fund going in there, and all they got to do is put in a big bid for the S&P E-mini futures, and then all of a sudden the algos smell it and they jump in and front run it.
I mean, I'm going to expand on what Dave said. They're holding up the bond market. They're holding up the real estate market, the equity market. I mean, they're the sole reason for the almost everything bubble. I mean, if we think about it, if you let interest rates float, the market determine them, and you drained all this stupid excess liquidity that has been injected in the banking system, I'm sure the 10-year would be, I don't know, 5 to 10%, something like that.
I don't even think you need to drain the excess liquidity for that to happen. I think the Fed would just stop because they're buying a minimum of 120 billion a month now between mortgages and treasuries.
Yeah.
So
what does
if
that
the
say
Fed's-
about how bad those mortgages are, huh?
Right.
It's
Well,
unbelievable.
Speaking of exchange stabilization fund and folks that get into these gold and silver markets, which I don't understand, because I do remember when Ben Bernanke said he didn't understand gold, which I thought was odd, given that the dollar was based on gold and he was printing a lot of those. Yet here we also see a WikiLeaks from the United Kingdom, London, to the U.S. Secretary of State. Well, we could do a whole show on this. Let's go straight to number 4 first. Rob, would you be kind enough to read this for everybody here?
To the dealers' expectations will be the formation of a sizable gold futures market. Each of the dealers expressed the belief that the futures markets would be of significant proportion and physical trading would be minuscule by comparison. Gee, where have we heard that before? Also expresses the expectation that large volume futures dealing would create a highly volatile market. In turn, those volatile price movements would diminish the initial demand for physical holding and most likely negate long-term hoarding by U.S. citizens.
All right, Dave and Chris, who would pay me an ounce of silver to go first to extrapolate what they think Jeff Curry of Goldman Sachs would think about this?
Go ahead.
I mean,
Okay, no one's going to pay an ounce of silver for
he'd
that.
probably
one.
say it's fake or something. I don't know.
Yeah.
But that's a famous letter. That was when Henry Kissinger was Secretary of State, and that was before gold futures were trading, which started in 1974.
And it seems if you scroll down to 5 here, like it worked. Future demand by U.S. citizens for gold. Most dealers do not foresee demand for physical holding significant, with the exception of initial surge during the first 2 to 3 months. On the whole, we're psychologically prepared to switch from small-scale gold purchases to large-scale long-term bullion holding. We're going to talk about setting your expectations there.
I mean, you could find just as damning statements and FOMC minutes from the late 90s and the early 2000s under
Mhm.
Greenspan.
Yeah, wasn't it in the Fed meeting minutes? Greenspan said they were manipulating the market to keep the price down.
Yeah, it said something like, should the gold price rise, we will continue to lease gold in increasing quantity.
Right, that was in response to, it was when Greenspan was doing the testimony in front of Congress, and Ron Paul asked him a question. I think it was about inflation, and if inflation starts to pick up because back then the Fed was printing money. Every time there was a financial crisis, the Fed printed money to fix it. And so Ron Paul asked him a question about the resulting inflation from that and the price of gold, and that's when Greenspan said that the Fed stood ready to lease gold in increasing quantities if they needed to keep the price down. And I think it was in order to tame expectations about inflation.
And then you even had Paul Volcker in his own autobiography talking about, he directly used the word suppress the gold price following the collapse of the London gold pool. And then when you start hearing some of the things that none of these guys say in the public that we find on WikiLeaks, I mean, it's really like the COMEX was an extension of the London gold pool. And that's kind of what I see happening now, where you reach that point where people starting to drain the metal. Now, I don't know what degree to which you could say the metal has been drained yet, but I mean, here's Rafi the Wise Farber. Silver continues to move out of the COMEX vaults. In the meantime, we're up to 1,247 contracts that have left the building. So that's over 6 million ounces. A week or so ago, it was 1 million. This is his article on the 10th. I think there was more yesterday. Here is his article from the 11th. 2.4 million left the COMEX yesterday.
Didn't they have to add to the approved list on the commercial bars?
Yeah, they did. They expanded greatly the number of bars that were acceptable for delivery under the COMEX contracts. That's right.
I mean, that's quite telling, in my opinion.
Yeah, I agree. It's exactly what I thought when I saw that press release from the COMEX or the CME.
And
even though it started out slow, I mean, it's now up to 50 million ounces almost in these deliveries.
Good.
It's a lot. And I think somebody came out, was it Wall Street Silver on Twitter, came out with a picture of one of the bars that came out of there as a really, really old bar. Something that maybe had been in existence for a long time. This old Spanish mining company, extremely old bar. Not something you would expect to see traded on the COMEX nowadays.
It came out of the COMEX?
Yeah, it came out of the COMEX. A really, really old Spanish bar came out of the COMEX. So maybe, we're not seeing all fresh new bars circling around there. Maybe they're having to dig around and get some old stuff.
Yeah, wasn't there one in Portuguese, I think?
That may be the one I was thinking about. Yeah, it was Portuguese, not Spanish.
So, yeah, I mean, and as far as I'm aware, I mean, they haven't made commercial bars in a long time, that particular company.
Well, I mean, it's hard to know exactly how close to that running out point you are. Although, Dave, you and we've been talking about it, I don't know, about 2 months now. You said, well, wake me up when metal starts leaving the COMEX. All right.
Now but you're talking about, what's he tracked? 6 million ounces of left the COMEX. I mean, they're showing over 300 million ounces of silver. That's, between the registered and the other category.
Eligible.
What's that?
Eligible.
Yeah, the eligible. Between the eligible and the registered, they're showing over 300 million ounces of silver. So 6 million ounces And again, I don't believe that all that silver, they really have that silver available for delivery if they wanted, but it's still, if you just look at the registered, it's not, you know, that's 6% of the silver that they claim to have in the COMEX.
I agree.
So,
I'm not saying the thing is drained yet, but I mean, in my experience, it's usually the kind of thing that happens slowly until one day you're like, oh yeah, and then they took the rest last night, which is not to say
I hear you.
Will happen, but I mean, that's why even more than, you know, the regulators waking up one day, it's like once enough money sees that they can end it, that's what I think will end it. And if you get to the point where you know, if you can't keep loading up on cheap silver, cheap gold, China, and I'm not saying we're there yet, but let's say we get there, or we are there, or we're going to be there. You know, if China can't get any more metal, then yeah, what else do they need this economic system for at that point? Rob, what do you think?
Sorry, I was looking for that old Portuguese silver bar, which I found. What was your last question?
I agree with Dave that we're not seeing, you know, the whole COMEX be drained.
Right.
But to me, just the fact that you're seeing metal leave, you know, and the first time it was like just 1 million ounces. Now, starting to be more and more. I'm not sure that we've never seen that before, but it's certainly not common. And I don't know, it just seems like the kind of thing that could be like, once people start noticing that has at least the potential to conceivably accelerate quite quickly. What do you think?
I agree. And I spent a lot of time a couple of months ago talking about registered and eligible stocks on COMEX, and the fact that since they came up with this whole stupid registered scheme, or registered eligible scheme, it used to just be, it was available for futures trade. That was like around 2000, 2001, they changed it in the metals, and you saw two categories, and you could see eligible just building up. And then in both gold and silver, the registered categories got razor thin. So it was very obvious, you know, even over the last 20-ish years, that a lot of the quote unquote gold and silver sitting in the vaults wasn't for futures trading. And then Rhoda Manley pointed out that memo that came out from COMEX on April 19th, which, hidden in a discussion on position limits, they laid a bombshell that the COMEX said, we don't really know how much of that eligible could be in futures trading. It's all privately held. So the vast majority of the metals were privately held.
That was a letter they sent to the CFTC.
Yes, because they were asking how much could be liquid, and they went and asked the depositories, like, you know, we don't really know because we don't own it, and, you know, it's not registered for the exchange. So then fast forward to Rafi's point that now he's starting to see some of the metal actually come out of eligible. So I would argue that metal came off of COMEX when it stopped being registered. And that process started in 2001. And you saw that big buildup of the eligible inventories. Now, some of that did come out as the price rose. It freed it up. They went into registered. But now if we're starting to see them draining that giant lake of metal, both gold and silver, out of the eligible category, then they're not even going to have that pool of metal to deal with, and COMEX is going to have a bigger problem.
Well, I'm darn curious to see how that plays out. One other thing I wanted to mention about the Exchange Stabilization Fund that I found intriguing. Yet amazing, while Bernanke does not understand gold, it seems like the ESF has some interest in gold. Oh, yeah, here we go. With approval of the president, may deal in gold, foreign exchange, and other instruments of credit and securities. What do you think they're dealing in gold with?
Well, that was part of the Gold Reserve Act, and gold was a currency used as currency back then. It was interchangeable with fiat dollars. So it makes sense that if they're establishing a fund to stabilize fiat foreign exchange, they also need to include gold in that basket, right? I'm not saying I like it or agree with it, but that's why it's in there. Because when the Gold Reserve Act was written, gold was a currency.
And the gold that was confiscated under those under the presidential orders back then is what financed the Exchange Stabilization Fund. So that's where the ESF got its original money. It was a lot of that gold that got confiscated. Some of it got melted down, but a lot of it went into the ESF. And so that ESF fund, the original funds that they had to intervene in other markets, came from that gold that they confiscated from Americans.
And also keep note that it says, as amended in the late 1970s, the act provides in part that the Department of Treasury has a slush fund, a stabilization fund consistent with the obligations of the government in the International Monetary Fund. What does that mean? What government in the in IMF? There's usually like 8,000 expensive lawyers that pour over this, and I would think words are clearly. What is a government in the IMF? What does that mean?
So the government as a participatory, so all the governments that participate in IMF and the SDR scheme, if you look at the SDR scheme, it's a basket of currencies, and you could manipulate the different currencies. So if you're China and you want to play around with the dollar or the gold price, you can do that through the SDR. You can manipulate the SDR, the ratios.
Well, I was fine. I didn't even know these guys had a website. I saw a Chris Powell video the other night where he mentioned, I'm like, wow, I thought this was like a hush hush thing. There are some whoppers in there. I will say that, although this I thought was interesting because here's the Exchange Stabilization Fund, Federal Reserve Facilities and Programs, the CARES Act. Of these like killer bills. They're like the teddy bear policy from the Exchange Stabilization Fund. And what's interesting is you see this was July 6th of 2020. And I'm thinking, what was I doing last July? And let's see if I'll slide us over to the side there. Then if you look at the silver price after staying below $20 for 4 years, it pops almost to 30 right in the middle of July. Go figure that. And here you can see is July 6th here. And 2 weeks later, the price breaks over 20. I cannot say I don't know if there's a connection or not. Anybody have any thoughts on that? That was the first thing I thought of. I look at the silver chart and
you shouldn't believe in coincidences.
Huh? What's that, Chris?
You shouldn't believe in coincidences.
I see a lot of them these days, but that's why I'm glad I have a show and I can talk to smart people. And Dave, what do you think as the industry veteran? Do you think the slush fund could have put, maybe not even specifically to silver, but could have, was there a connection there? What do you think this money went to?
I have no idea. I mean, the Exchange Stabilization, even though you have this website, which I'm assuming is on the Treasury's web, the Treasury's web page. The Exchange Stabilization Fund is essentially basically off balance sheet. No one really knows for sure what they traffic in anymore, right? We know Reagan authorized them to stabilize the stock market, so they buy stocks. And then when Robert Rubin was the Treasury Secretary for Clinton, that's when I happened to notice that it seemed like the overt manipulation of the markets became even more intense. And I think he basically opened up the Exchange Stabilization Fund to traffic in whatever it wanted to traffic in. I'm just speculating there. I can't prove it.
Dave, can I ask if I hop in for a second, maybe a question? I know this is from your era. That use the words traffic. And I'm wondering, maybe you're getting confused and you said Reagan too. Maybe you're bringing back memories of the Iran-Contra affair where it's so elaborate that sometimes I get it confused. So I'll take a moment and read it directly from Wikipedia to get the details right. The Iran-Contra affair, popularized in Iran as the McFarlane affair. That'd be interesting to read about why that might be. Scandal was a political scandal in the United States that occurred during the second term of the Reagan administration. Senior administration officials secretly facilitated the sale of arms to the Khomeini government. Dave, I thought the Iran was the terrorist. Why would this? There has to be a mistake that the United States government would be secretly funneling arms to the alleged terrorist government, which was the subject of an arms embargo, no less. But, I'm sure there was probably a good reason, and everybody was on board with it. So let's just finish this up. The administration hoped to use the proceeds of the arms sales to fund the Contras in Nicaragua, and under the Bolin Amendment, further funding of the Contras by the government had been prohibited by Congress. So they knew what these guys were going to do. They passed the damn Bolin Amendment because they knew what they were going to do. And here's a president sending a general to sell cocaine and guns to overthrow governments. And it sounds a lot like what you just described of the Exchange Stabilization Fund. Am I missing something?
Well, actually, you know what? The real guy behind this was George H. Bush, who also happened to be the guy that transitioned the OSS into the CIA.
Well, Dave, come on, let's give him credit. He appears right down.
I mean, Oliver North was the pawn. He was the guy fronting.
He's the fall guy.
This was George Bush's brainchild.
Well, it's amazing that he was able to cook up the DARE program at the same time. Maybe it was Noriega that helped him with his intimate knowledge of cocaine. But these are the guys that are running Stabilization.
Well, how do you think the CIA funds all its black ops? They do it by dealing in drugs and
Dave,
arms.
What would you say to the children watching today who are wondering, is this the way the country should be run? And let's say that it was facilitated by an incredibly fraudulent currency, which seemed to be on its last legs. And maybe there's some youngsters out there saying, you know what, I don't want to spend the rest of my life under a system like that. Should we rebuild something different where this stuff doesn't happen? Or what would you say? Come on, Yoda. What do you got for the kids?
It's too late. The kids today are already just completely brainwashed. It's too late.
I had you set up for this inspirational Tony Robbins moment where it's like, kids, just have a dream. We can do it. And
they're all going to be sterile zombies wearing masks walking, at that point when they're our age or my age.
Dave, you do not have any children. Is that?
No, and I'm glad I don't.
Okay. Rob, as the parent in the group, can you follow up that inspiring wisdom? Is it possible?
Sorry, Rob.
That's all right. Well, I did right by my kids.
Rain sunshine on you.
I did right by my kids, and they both invest in gold and silver. So we've got that taken care of in our household. That's pretty much a prerequisite.
That's an outlier, though.
Yeah, I will say this. I will say there has been some. I will credit the millennials because the millennials are entering their prime spending age. They're starting to get in their 30s, and they're at the point where they're facing probably having less of a lifestyle than their parents did. And I think they've wised up quite a bit to the game. They may not quite understand as much, but I think they are a big part of the Wall Street silver movement and the silver squeeze movement. So I do give some credit there. Do I think everybody's awake and seeing issues? No, but I do see some support there. So I think there's some signs of life.
Green shoots? Would you call it green shoots?
Yes, the famous green shoots.
Remember that?
Headwinds. Headwinds and green shoots and other silly Fed words. Chris, what do you think about the CFTC throughout this whole saga? Does it become harder to believe that there is a legitimate agency really with any intention of protecting the markets, or is it a
no? Of course not.
That's
just so absurd to think these regulatory agencies are, let's say, forced to come down on something, especially in the monetary system. There's no way. I mean, what was it? Mark Chilton, he was at least a little bit honest, I think. He didn't do anything, or he couldn't affect anything, at least. I mean, these are all for show. I mean, the government having a regulatory agency, really? They need a regulator to oversee them.
I agree. And Rob, you're the auditor. I'm actually saying this seriously. I mean, because I've submitted evidence to the CFTC already. What does an auditor recommend to do if you submit evidence to a regulator and I don't know. It doesn't seem to me like they have any interest. No one's ever contacted me from there about, hey, Bart said this, or why did you contact him? Or, I mean, I know Ted Butler's been sending them every piece he writes for 15 years. What does one do when at least there's legitimate reason to suspect that the regulator isn't doing their job for whatever reason, or needs to be regulated, like Chris said?
So if you go back to your document on why the exchange was created to manipulate the price and disinterest the public in actual ownership of the metals. If you're going to go that far, why wouldn't you then also set up the regulator to look the other way while it's going on? I mean, if you're going to go, you might as well go all the way. When you look at how the CFTC was created, it was created with not a lot of power. This is something I covered on my channel, 2 or 3 months ago. I went all through the history of the Commodities Exchange Act, the CFTC. In a nutshell, the CFTC doesn't have a lot of power, and that's not to excuse them from being dumbasses like they're being right now. But they don't have a lot of power, and a lot of them, it's a captured agency. They're fighting for life, and they don't have any teeth. So I do think it's worthwhile to submit information to them, and because that will come out later, and whatever investigation ends up getting done, that will all come out. But honestly, the regulator's not going to fix. The regulator's not going to fix the issue here. What's going to fix the issue is for this market to blow up and for it to be exposed, and people to start asking questions. A lot of people to start asking questions to the point that they can't ignore it.
Rob, is the CFTC the silver equivalent of the Warren report and that ridiculous offensive document the government produced following September 11th? Is that the metal equivalent?
Essentially, yes. They're there to provide the illusion that that market is well regulated, but it's not.
I somehow in that, I think you may have seen that video I did last week. It was about an hour and a half with the evidence of silver manipulation, where it's looking at, I mean, they saw these Deutsche Bank transcripts. I mean, I only got the ones I had access to. I'm sure there's, and where's the JP Morgan transcripts? How come people can't see? And in fact, how come nobody knew what Bart Chilton said until I talked to him, I don't know, 5, 6, 7 years after their investigation? That seems like material information that, I don't know, at least as I grew up, I would have thought that would have been obstruction of justice by not mentioning any of that. And yet still there's just nothing. And somehow in the process, Rob, I think because you edit and you make videos, it's like your mind sees things in a different way when you're like cutting and pasting, you're rewinding, you're hearing the same. It was somehow as I'm going through this and listening to Bart saying and what he said, I'm like, what if this thing is all just designed so that they get all people like us riled up and we're sending letters? Like, how come they never do anything and we're tweeting them and this and that? But it's just the same as like JP Morgan. They know they're doing the crime. They just sit there counting their bonus check and laughing. And it's all designed just like you get people, Democrats and Republicans, fighting without realizing there's a guy on top who owns both parties, and it's the same thing.
Yeah, it's kabuki theater. It's theater to, the whole reason for the two political parties is to control the people and think that if they get the other party elected, they'll fix the issue. And so the political issue here, they're all puppets, right? And then the powers up here, the same thing with the regulatory agencies. The powers up here, the regulatory agencies are to be the front. So that people like us will complain and then nothing ever really gets done. And then you get frustrated, but you're not dealing with the real power center. It's that layer of almost plausible deniability between the people in power and then the actual citizens. So the people in power don't have to really answer to the citizens.
Well, I'll take it even a step further. I mean, they like it when we send in complaints and criticisms and allegations, because then they can say, oh, we investigated it and didn't find anything. So, I mean, it delegitimizes our argument even more, because there's an official regulatory body saying, well, we looked into it, we didn't see anything. I mean, it's complete regulatory capture. My friend John Titus did some great videos on it with respect to the great financial crisis. And when you go and if you look at the Justice Department, the SEC, the CFTC, they're all staffed. You know, the committee members are all staffed by essentially bank puppets. I mean, Gary Gensler was the head of the CFTC when Bart Chilton was there, and now he's the head of the SEC. Well, Gary Gensler was at one time in one of the guys considered to be in line to run Goldman Sachs. He was essentially Henry Paulson's, I call him Henry Paulson's mini-me, because I think that's who he had that's whose coattails he had latched onto. So, I mean, it's just complete regulatory capture. I had a good chuckle because the Wall Street on Parade website, the Martins, Pam, and I forget the husband's name. They wrote an article today, and the headline was, Powell gushes over Wall Street, or highly compliment. And I'm like, well, who do you think is Powell's boss? The banks, the big Wall Street banks own the Fed. I mean, people don't get that. People don't understand that. I mean, it's right there. You can, if you dig in the website, you can find out the ownership structure. It's owned by the stock of the Federal Reserve is owned by the 12 Federal Reserve regional banks, and who and those are all, it's all the regional banks that are members of those. And the New York Fed is the Mac Daddy. And the New York Fed is probably really the nexus of power at the Federal Reserve, because it's all the big Wall Street banks.
Dave,
and that happens to be, by the way, the same building where the New York Fed is housed also houses what? The Working Group on Financial Markets, which oversees the Exchange Stabilization Fund.
Dave, would you say it's similar to that great scene in Back to the Future 2 where Marty McFly is in the alternate 1985 of Biff's world, where things are a little Bush-like, and he's like, well, I got the gun, they'll match the bullet, and he's like, kid, I own the police. And it's like, that's what it feels like with the regulators.
Well, that's what it is. It's complete regulatory capture.
I mean, adding on to what Dave said, and the banks are owned by the government or the deep state, however you want to call them.
It's the other way around.
Yeah, maybe. I mean, but
the banks are part of the deep state.
The Fed is what, a cartelization device of the commercial banks.
Right.
You can inject them with as much capital as they need. They're never going to go bankrupt. Oh, you have this scapegoat in Bear back in 08.
Bear and Lehman, yeah.
Yeah. So they try to give the appearance that they're not all basically one entity, if you can say that, and just not the case. But people buy it.
Dave, do you think the way that they set this up, the way that they have these pseudo federal agencies, the layers of banks, and then behind them is all the private banks, that's basically what's allowed them to keep their anonymity for so long, because people think they're part of government and they're not, but you have to dig 2 or 3 layers down to really find out who owns all this stuff?
I mean, who's gonna question that? Most people don't. I mean,
yeah, that's what I'm saying. The average Joe is not going to question that at all.
I mean, we're conditioned in school and whatnot to not think for yourself anymore. I mean, even when I was in, say, high school 20 years ago or whatever, and that's the only thing that the government has been efficient in doing. Their little propaganda machine, brainwashing.
And look how that's really the move this whole thing depends on. I'm stunned. It's like, I don't have to dig hard to find the stuff I come up with. It's almost like they just assume no one's ever going to question the brand name. Although someone mentioned the cartel. I know from time to time people take heat. They're like, oh, the silver cartel and this and that. Might add Deutsche Bank, one of their traders, even referred to themselves as the mafia. So I thought that was classy. And because I know Dave Kranzler's sitting there thinking, he's like, all right, enough conspiracy theories. He wants a physical market update. So I've made the James Bond of the silver world, appear from the ether. There is Andy Schechtman on an iPhone. Look at the technological savvy that he's displaying while he brings us the silver news. Andy, welcome on in, sir. Tell us what's going on in the physical market.
Not too old school to figure it out. Good to see you, Chris. Silver market is brisk. I have inquired about any goings on with the U.S. Mint and was reaffirmed once again that we are expecting the Mint to close sometime as soon as perhaps the end of this month, although nothing has been verified. I'm getting from very good sources that the Mint is going to close. I asked, well, how long will the Mint be closed for? And was told that they expected it to be closed for the same type of period that they do at the end of the year when they retool for the new the next year's coin. So it could be as long as 2 months is what I'm being told. If that happens, all of the talk of difficulty getting product could certainly get tougher as the U.S. Mint, which represents so much of the supply in North America, would effectively be shut off until roughly June, July. And then they resume with the new Type 2 silver and gold eagles.
Andy, did you ask them if the Mint is closed because they're implementing the anti-counterfeiting security features in the gold and silver eagles?
No, I asked about that. And actually, the guy that I asked about that, who's pretty high up, said he didn't even know about that. So I also, my assumption here is that it's going to be similar to the Royal Canadian Mint anti-counterfeiting laser engraving. I don't expect it to be a chip, but whatever it is, it's certainly going to involve a new procedure that isn't involved in the subsequent year gold and silver eagle since 1986. So it means retooling the whole assembly line, I guess. But for what it's worth, I've been told it could be up to 2 months.
Did he say that those reports are inaccurate, or that seems odd that someone who is high up in the Mint wouldn't be aware of the measures that have been reported?
I thought it was somewhat odd. Those I believe it to be not inaccurate. I believe it to be true. So typically, the U.S. Mint follows the path that the Royal Canadian Mint blazes before it, and started with 24 karat gold, and the anti-counterfeiting measure is something that has really gone over well with people looking to buy silver coins. A lot of people like the silver maple leafs and the gold maple leafs. And when they buy them, they request that they were the ones, I think, after 2017 that had that laser engraving in it because, there's a lot of talk of Chinese counterfeits. This is a way to protect oneself and guarantee that the anti-counterfeiting measure will eliminate any possibility of counterfeit.
Can you ask him why it's that they don't know about it? I don't understand that.
Well, this was someone who wasn't actually at the Mint, but this is someone who deals with the Mint on a daily basis. So more along the lines of securing product from the Mint. So I believe that to be true. In fact, I have read the exact same things that you have, Chris, and I asked him that exact same question. So I do believe it to be true. The person that I asked was not at the Mint, but someone who deals with them on a daily basis.
Is there someone at the Mint that we can ask this question to? I'm curious. I mean, it seems
I can reach out on Monday and talk with my representative there and find out what the scoop is on that. It was a question that I never even really had, just believing that, that they were enacting some sort of anti-counterfeiting measure. And I guess in the back of my mind, I always assumed it was laser engraving.
Has the Mint confirmed that they will be shutting down?
Here again, this is for whatever reason. When I ask this person, when I talk with this person, his term to me is this is inside baseball. So basically what he's saying is it's inside information, and he won't go on record as saying he knows it to be the case, but he says everything that he believes, and this is someone that I have a lot of faith in, everything he believes will see the Mint close down at the end of March or into April, and for as long as 2 months.
So, Andy, I'm on the U.S. Mint website here. What's the best way if people at home want to contact? Just as there's a contact number, is there a better way to? Here, inquiries at usmint.treas.gov. 202-354-7227. maybe some of the folks in Wall Street Silver can call. I mean, would think if they're going to shut down for 2 months, that would be a reasonable question to ask, as well as why are they inserting anti-counterfeiting measures? In fact, I'll call them next week and find out what they say there. Andy, I have a report from another dealer who said delays are lower on 1,000-ounce bars, and so are premiums for us at least. We can get bars either immediately or less than 2 weeks away. Premiums are now as low as 30 cents. Is that matching what you are seeing?
No, that is not matching as what I am seeing. In fact, I would be shocked to see that be the case. So although I haven't looked yet this week, everything that I have tried to do leading up to this point has told me that that is completely not the case. So I'm not calling that story inaccurate. I'm just saying that perhaps they found a source different from the ones that I have, because I've been told mid-March when I was looking in early February, and I was told as high as $1.25 premium.
All right. And Andy, what is happening in the physical silver world that not only don't people know about, but that no one else has even thought to ask about, but that they should know about?
That's a tough question. I guess the one thing that I find to be the most challenging is that we've had to, like, for example, recently we had to secure product from the Perth Mint and go out as long as 2 months into the end of April to guarantee delivery for the month of April and the month of May. We have to pay up front at the highest premiums we ever had. Getting product now is not as simple as calling a distributor or calling a mint and ordering it. We have to pre-order 2 months in advance. And the way that they make it seem is that if we don't do it now, that we will be beat to the punch by other distributors, and they can't guarantee that we will have product come spring. So we're having to go out as long as 60 to 90 days, pay up front in total and the premium, and wait and hope that it gets delivered on time. That to me is the biggest challenge that we see in securing product. And, you know, quite frankly, the supply chain is very, very, very tenuous right now. It's really difficult to get product in large quantities. We could do it, but it would take a long time, and I can't be specific on what that time frame is. I could probably do 50,000 ounces in Australian kangaroos for delivery in April, but you know, here again, that would wipe out the entire allocation that we just paid for upfront 2 months in advance. That's the biggest change to me of anything that I've seen on the wholesale side. Buying way out in advance, paying big premiums, and crossing your fingers that the market conditions don't change and those premiums come down between them. But I would challenge, you know, although 1,000-ounce bars aren't a big part of what we do, I have everything that I have heard over the past 3 months would tell me that getting 1,000-ounce bars is really, really difficult.
Andy, that's what I heard last night when I talked with John Adams from As Good As It Gets in Australia at Adams Economics. And he mentioned that the Perth, because you got that message that both of us were copied on from one of your fans, that they had an issue. His dealer was having an issue because they couldn't get silver from Perth Mint. John Adams said that Perth Mint is sending silver to the COMEX to fill delivery. Why does the COMEX need silver from Australia to meet their delivery demands?
Well, that's the point. You know, and they came in and rescued them last year with gold.
Why do they need to be rescued? I don't understand that.
Well, neither does anybody else, quite frankly. And I guess obviously, why do they need to push people into exchange for physical on the LME? You know, I think that, you know, COMEX is rather disingenuous, and they're obviously having to source metal from their partners in order to not face the problems of running out of supply when, you know, this is the last thing that they need right now when there's a massive light shined upon the silver short. And if all of a sudden you can't get product, that only exacerbates, that's blood in the water. So the fact that in that same article, he was saying that people in Australia can't get anything for weeks on end, yet they're standing ready, so they say, to send a whole bunch of metal to the COMEX market is really the question to be asked. If they're not taking care of their own countrymen, but will send it to the COMEX, what does that really mean?
Well, on that note, we'll wrap up because I can see nobody else, especially Rob, has anything to say about this one. I
have something to say about it.
I do. Dave, that's conspiracy theory. Stop it. Rob, you're first.
Yeah, a lot of what Andy's saying is right on point. And, you know, the U.S. has a relationship with Australia, the part of the Five Eyes network, the spy network, where they try to spy on China and all the other nations. And so there are some geopolitical relationships there. So it's the potentially maybe the U.S. said, hey, we need more silver. Australia put political pressure on them to get it. Maybe that's why Australia is sending it. But if I'm an Australian citizen, that probably pisses me off, because really you would think that they'd take care of their own citizens first. But the U.S. is the big 800-pound gorilla, right? So they're probably putting pressure on their partners to get the silver to keep the COMEX floating.
I remember living in Australia when I was going to grad school. Lived in Sydney for a while, then moved to the Gold Coast. But there were like 3 bullion dealers, you know, within 3 miles of me. There'd always be a line. Why would they do that? I mean, I'm sure the U.S. is probably bullying them like we do everything else. Hell, I mean, if I was a person, I'd say, hell no. Give me a 30% premium on the metal you want.
Well, that's pretty much what Dave has been saying in his articles, that, you know, if the mints would just start taking a fair price, demanding a fair price for product instead of not meeting demand because they're having a hard time sourcing blanks, maybe that would make a dent on things. And that's actually a very good point.
I mean, the silver's out there. You know, people who have silver aren't going to sell it at the current price.
Right.
So let's find out at what price will people, existing holders of silver, at what price would they be willing to sell some silver? I said I'd probably let some silver go at $50 just to, you know, just to take profits on stuff that I bought down at $4 or $5. So I sell very little of it there, but that's how markets are supposed to work. You know, not shutting down these mints because they can't get the silver blanks to make the bullion products.
Exactly. I see all these articles about there's a silver shortage. You never hear there's a diamond shortage. It's because the price isn't allowed to rise, so the market can. You know, Dave, what you were saying, and Andy, you'd be able to get plenty of product if we had market prices, right? Eventually, that's going to break. I hope sooner than later. We'll see.
Well, when you think about it, with a $10 spread for Silver Eagles, essentially it's I mean, the U.S. government owns the mint. It's the taxpayer that's getting screwed, right? Because the mint should be able to sell, you know, obviously you leave room in there for spread for the wholesalers and the dealers, but I mean, the mint should be getting paid a lot more for the silver that it's selling.
If only they cared about profit loss.
Well, here's our last question for the evening before we wrap up. Maybe not an actual answer, but are there any even guidelines on a process of how to think about how much silver is left before you reach an issue? So, Andy, based on what you've seen, actually, I got another thing I wanted to ask you also. I mean, we can look at what's available in London. Obviously, metal comes in from other places, but is there a way that we can measure that? And I'll give everybody a chance to answer that question. Although, Andy, before we get to that one, can you check if February 2nd was how that would rank in terms of single days of investment demand from your store?
I do know, just looking at call volume on our voice over IP system, it was by far the biggest call volume day we've ever had. By the next time we talk, I can tell you how many calls we had, but they show you a graphical representation and you can see how many calls came in, and it looks like the spike went off the page. So yes,
on the second in particular, we're not talking about the first or the third. I mean the second in particular.
Yes, and we were just
the day
talking
the price
about
came
that.
down 10%.
Yes, we were just talking about that the other day in a meeting, and the call volume was astronomical off the chart.
which is quite interesting because this hit me earlier this week, and we will get back to that other question. I know I'm veering off on a tangent again here, so we'll just have to accept that, because these are 1 month additions into the trust. So this is January 29, February 1 and 2. But to put that in perspective, about a week before that happened, you had a 20 in January. All right. Now, if we go back 2 years, there's that 20 in January. You can see that was the biggest in 2 years. Biggest going 5 years back. Tied, maybe slightly below, one in 2013 if you go 10 years back. And if you go 20 years back, it's basically very close to tied for the first. So in mid-January, you had this 20 spike, which was close to the biggest in history. Then on Friday the 29th, you have 34 million go in, which blows away the old record and is the biggest ever. On Monday the 1st, you have another 20-ish go in. And then whereas the previous record was about 20, then on Tuesday the 2nd, the day the price came down 10%, you have 61 go in, which is like 3 times the record as long as silver has been trading. And I'll keep talking to the bullion dealers. I don't know, maybe you guys can think of another metric. But based on what Andy said and what this chart shows is that on February 2nd, when Jeff Curry was going on TV on behalf of Goldman Sachs and saying a lot of stuff that was flat out untrue, February 2nd could well have been the single highest day of silver demand in the history of silver on planet Earth, and the price came down 10%.
Very logical.
And on Rob, I don't know if you mentioned this in your video. Jeff Christian makes a video on February 3rd that he starts off by saying that's his birthday and says, well, we're going to talk about silver, which is a little passe. I'm like, excuse me? And I think this is the thing, because I keep thinking back about this Jeff Curry guy. Some of the things are so insane. I'm like, Jesus, this guy's been saying these whoppers for years. But I looked, he didn't talk about silver before. And he's on February 2nd and then February 4th, twice, after 40 years of Goldman Sachs, has never said anything about silver. I think it's not because they wanted to put him on there to make him, get him publicity. That was damage control. Rob and Andy in particular, you guys have heard me for the past month saying that I thought something broke that day. Is that correct?
Yes.
And I said it that week as well. Rob,
Well,
you had
this big session we had on a Sunday where we sat there for hours and talked about it.
You were there the night, I think I was still on the ground after I'd fallen off my couch that Tuesday when the 61 came in. And that was the night I was like, there's something not right here. Remember?
I remember.
So that's why, where we started an hour and a half ago mentioning that it's like that scene in The Big Short where the thing is already broken. It's the price isn't reflecting it yet. Although we're seeing the divergence between COMEX and physical, that's already started.
Chris.
It happened last March and the price shot up 50%, and it's happening again now.
One of the things that I find most discouraging or illuminating, however you want to look at it, about everything you just said, is that over the last 2 weeks, north of 90 million ounces have been taken out of the back door of SLV. Who's the one taking possession of that? Well, it's only the authorized participants. So who are they? According to Jeffrey Curry, they're the shorts and the commercial banks. So the fact that 90 million ounces can be backdoored out of SLV over the last 2 weeks, after all of that happened, is the question that needs to be asked or discussed anyway.
And that's how that works. That's why the SLV is set up, because the shareholders get it in and the banks take it out, right? That's the whole scheme, I think.
Yeah.
Dave, what do you think has been happening? We saw that massive chunk of metal, 118 million ounces reportedly added into SLV over 3 days. And then a number has come down consistently since then. when it first started coming down, I was thinking, all right, maybe a lot of people piled into SLV and now they're hearing a lot of warning signs about SLV, but it's come down quite a bit. Do you have any thought on what's going on there? I know you don't, and I agree, probably we're not having any metal physically move anywhere, but any thoughts on whatever they're reporting?
That's Rob's question. Rob's been,
Dave, this
been the
one
one
sounds like it's a little too hard for you. Rob, could you help him out here?
On what SLV is reporting?
Yeah, what do you think's going on with the metal coming out of SLV after those massive additions?
You know, it was always set up, if you looked at the prospectus, and Dave knows this very well. I think Dave and I have talked on this in previous conversations, previous interviews. It's well known that the prospectus allows them to not guarantee what's held, that the sub-custodians have no ability to guarantee, sorry, Chris with a comment, have no ability to guarantee the quality of the metals. So the prospectus has been, has allowed them to basically give the appearance that SLV is legitimate, like they have all these silver holdings, it's good quality silver, it's not rehypothecated. But in reality, there's no guarantee there whatsoever. So what happened was you have this big influx into SLV, all these ounces going, they say, Chris, you did a lot of shows on this. They say they got it in the same day, you know, they're able to get that 110 million ounces over 3 days. And then it leaves, and I'm thinking, okay, that was just a mechanism to move, to allow the public to buy silver to give it to the banks. So the banks get it out. Because again, you buy all this year's SLV, and the prospectus says we don't actually have to have the silver. We can have horrible silver, not high quality silver, not like good delivery bar type silver, or maybe we don't have it at all, or maybe our custodians basically give it all away or lose it, you know, off their boat or whatever. And there's no guarantee of performance in the SLV. And that's why I started screaming at the time, don't buy SLV, because you're basically giving the banks silver. And if you have that share, you don't have that exposure to that silver, and don't feed the beast, don't feed the system.
Rob, in addition to that, JP Morgan has no liability at all.
That's right.
Anything can happen. They're not liable. They could sell it all. They're not liable. And there's a bunch of other provisions that are just unbelievable. They don't have to buy insurance on it. I mean, it's so fishy that if you just read the highlighted sections of the prospectus, you'd be like, am I really this stupid to put a lot of money in here?
I mean,
as far as
written to be hard to read too. No, Dave, you're gonna have to wait. You had your chance, because I have a question for Auditor Rob. Or fine, go first, Dave, before you lose. You're like the guy in the Big Short.
I wanted to circle back to
like zero.
You know, the volume of silver that they claimed went into SLV over what a couple day period, and now it's coming back out. What makes you think that's anything more than just, you know, paper entries? I honestly don't even think it's the approved participants or authorized purchasers, whatever they call the banks. I don't even necessarily think that they're moving metal in and out of there. I think it's all on paper.
I've been told that there's a big warehouse and they move the tag from one pile to the other.
And that could be what it is. It could just be, oh, hey, there's what was it, 118 million ounces of unallocated silver sitting in XYZ vault over here. So we're just going to say that, you know, that's our silver for now. And when people start selling the SLV shares, then we can release our claim on that unallocated silver, which, you know, probably has 20 other claims on it as well.
Dave, can you do me a favor tonight?
What's that?
Can you know that big pile of silver you've hidden underneath your hot tub? Just put a little tag on it that says Chris's silver.
There you go. That's how the game is played. And you give me money for it up front.
Yeah. I'll give you I'm gonna get a future 100-year U.S. Treasury bond. I'm gonna swap
they've set
that
this
out.
up beautifully. They hold your money, and they don't hold the silver. So
Can I repay you in $2,050? The year 2050?
I'll be
Do
dead
like a
by
forward
then.
contract on that?
I'll be dead by then.
So, what do y'all think about, say the COMEX, they took more deliveries than the amount of silver that they could source. Do you think they would just take, JP Morgan would just give silver out of the SLV to them?
Oh, interesting you bring that up. Back in July, JP Morgan moved 30 million ounces from eligible to registered. 30 million ounces in a freaking day. That was at the time. Yeah, that was at the time that the EFP had gone crazy, because remember when the shutdowns happened, both silver and gold EFPs went crazy. People were going over to London, but the silver one went for 4 or 5 months. And right in the middle of that whole thing, signs that you couldn't get it on COMEX, JP Morgan in a single day took 30 million ounces and basically bequeathed it to registered category. Now, whether that was actually theirs or rehypothecated silver, I don't know, but it came out of their stack anyway.
Hey Rob, wasn't that really close to the time that the ruling came in, that the penalty that came in, that a lot of people thought, if I remember correctly, that was part of the settlement, what they had to give back up for, or am I wrong in that?
Yeah, I think it's about that same time. So it could have also had maybe a legal requirement there.
Quite a
Rob,
coincidence.
did it end up meaning anything though? I remember that clearly, but now with 6, 7, 8 months later, what do you think that was all about? I've still never understood what that meant anything.
It's hard because you don't have the transactional data. This is the whole problem with the COMEX. They give you just enough data to where you can make an assumption and be wrong all the time. But the way I read the data was they didn't have, for the deliveries that were going to stand on COMEX, they didn't have the metal. JP Morgan had to lubricate the system. Now, maybe they threw it in there and then they talked people out and bought them out in cash. I don't know, or said, roll your contracts and we'll make it worth your while. We'll give you some cash. Whatever they did, in these private backroom deals. But I think they had to give up 30 million ounces to keep that market from seizing up. I think silver was going to seize in July. There was a ridiculous amount of deliveries going on. There was a big run on silver. They were trying to punt stuff to London. I don't think London probably had it, or you had enough people willing to give it up at that price. What was it at the time? Maybe it had gone from 11 to 28 to 29 during that month. And I don't think people wanted to give it up at that price. And so I think JP Morgan had to cough some of it up. Now, how much they actually lost, I don't know. We're never going to know because you don't have the transaction receipts. They don't publish those.
What I don't understand is, obviously there's gross manipulation, and gold and silver, for obvious reasons, they're a threat to belief in fiat money. But why not let silver rise to 35 or 40 just to let the market clear a little bit? I mean, doing this is actually more dangerous because there's going to be a blow off top if it came down to that.
It creates more demand, right? Because you got a cheaper price for silver. Yeah,
exactly. So I mean, it's actually quite stupid to try to keep it down here, in my opinion. I mean,
First, I will disagree, if I may. I think that when you see silver get over 30, you're going to have that same effect that you saw on that weekend of January 30th and 31st, where all of a sudden people care. CNBC's talking about it. I think that when it got over 30 that day, had it not, if you had closed, it started coming back in. But actually, Dave, maybe you could talk about this. I heard Jim Willie was mentioning the difference between, on like from a margin basis, like at First Majestic's at $25 intraday is one thing, but if it closes at $25, a lot of from the margin perspective, things happen that do a lot more damage. Any thoughts on that?
I don't know. I'd have to see what Jim Willie's saying about that. But what I will say is that, I think that the recent takedown in the price in the paper market in gold, and really silver's outperformed gold during this takedown. The gold silver ratio hasn't hasn't, well, it's gone up a little bit, I guess. But if you believe the COT reports, the banks have closed a pretty large amount of their short position and they've collapsed quite a bit their net short position. And I just happened to notice, now this report is through Tuesday of this week, released today. The hedge funds took down their long position and they started shorting. They started adding to their short position. So their net long got smaller by 16,000 contracts. So this is a pattern that we're usually seeing.
Now, right?
Pardon me?
That's like 2-3 weeks in a row, right? With the hedge funds.
Well, I don't know that they were shorting last week or the week before. They were definitely liquidating longs, though. Yeah, for sure.
Yeah, exactly.
So, and this is a pattern that you usually see when the market's bottoming, where the banks are collapsing their net short exposure, and the hedge funds, not only are they unloading their longs and monetizing the short position of the swap, of the banks, the swap dealers, but now they're also the momentum that the hedge fund algos are telling, are shorting the gold. They're shorting momentum lower. And this is, we still could go lower, but I'd say that's a pretty good sign that we're at a bottom or close to a bottom.
It's also a good sign that
to me, the motive for taking down the price like this wasn't necessarily to protect the dollar. It was so the banks could monetize all the shorts they put on.
They were buying out of their shorts. That's why they've been spoofing it, because every time they short and they blow through the stops, they're essentially taking the silver out of that guy's hands. That's why they're doing it. Here, this is the red line. This shows how short they are. So here's 0. So the farther below 0 here, maybe it was actually you can see if you look in the yellow box, about halfway, the one with the C in the parentheses, negative 77. That's January 21st. Here, February 1st, short 73,000. And now, as of this latest one, which I believe includes today, down to 55,000. And you can back out on this chart. Look at the correlation. Here's the price. It's like a mirror image. Here, they're short, price comes down. They get flat, price is flat. Price goes up. Every time they get short, price comes down. Here where it drops, they got really short. In fact, I finally started trading this last year until the pattern broke. Right now, it was maybe it was almost 2 years ago in 2019 where it stopped for a while. But yeah, they have been getting less short. And that's what I think is there's a lot of things that happen in the way it's traded, but when you see those, and then you even saw Goldman shows up issuing, I think I have that one pulled up here too. You see they were issuing delivery. So they were short. They hammered people out of their COMEX contracts and then they deliver metal. That's about as dirty and blatant as you can get. You guys a pump and dump sign, send it pictures, selfies to the CFTC is the only way, and still probably nothing would happen. But that's how blatant it is.
Any of you guys ever wonder why these hedge funds are supposed to be so smart, why they keep getting fleeced over and over and over and over and over again? Why they never just stop playing in that sandbox with the commercial banks? Because as Chris says, every time the commercial banks go long, the price goes up. When they go short, the price goes down. Do you see the correlation? It's interesting why these hedge funds play ball with the commercial banks in this sandbox. I've yet to figure that out.
It's for the same reason people buy treasuries. It's like the way, and because you can get a bonus if, they keep blowing the bubble bigger, your fund's going to look good. If you do anything different, you're going to look like the bad guy, and that's how it goes. If you told me some of these funds get bailed out by a plunge protection team so they can, it's like giving the dumbass gambler more money so that he can go burn it. I don't know. When I was trading, it was regularly, they trained us, review, we'd have 20 different stocks we were trading options on. And maybe there's this one stock, I think I'm great at, but I make a fortune in the others, but I get crushed in this one month after month. At least at some point, well, maybe I can figure out why I'm losing, or maybe I should just stop because I can't figure it out. Or I don't know, maybe want to be careful not imagining things that aren't there, but I've seen a lot of unusual things. And if there was someone subsidizing that, kind of like when you see caravans of people at, traveling through Mexico and you hear Soros is pumping dollars in there. I don't know. It's not a financial market. And it's sad to me when capitalism gets blamed for this fascist orgy that they pass over there, which, they don't even hide anymore. There you have it. We have February 2nd. Arguably, we'll call it the single greatest demand of silver in one single day in history. The thing comes down 10%. They put Jeff Curry. I don't think they wanted to put Jeff Curry on there. Putting Jeff Curry on CNBC to talk about silver, that's pulling the goalie. That's what that is.
Did you say Jeff Christian or Jeff Curry?
Either of them. Putting either of those guys out there, that's pulling the goalie because you have no other play. There is anyone can tell me I would disagree with that.
Dave, what happened? Did the open interest go down quite a bit in the COT report this week?
Silver went down 2,900 contracts, and gold actually went up 6,800 contracts, and so it went up 6,800 contracts, and the hedge funds shorted 6,100 contracts. But Andy, to answer your question, I mean, that's one of the mysteries of the world. I mean, you've been around in this sector as long as I have, probably longer, and it's everyone's been scratching their heads over why do the hedge fund? I think it's just of each specific hedge fund, it's a small portion of their portfolio, and saying that they have gold in there via futures adds risk reduction, volatility reduction characteristics to the overall portfolio, right? If they're holding stocks, bonds, mortgages, and other alternative asset investments, it reduces their Sharpe ratio to have gold in there, right? And that's the only thing I can figure out. And the other thing that I've never been able to figure out is how come these hedge funds, I mean, they're supposed to be the masters of arbitrage. Why aren't they standing for delivery? They never stand for delivery. In any delivery period, with the exception of a few months this past summer, you never get any more than 1% of the long standing for delivery. And it reminds me of that famous interview that Kyle Bass did, and he actually went to the COMEX, to the delivery the people that process deliveries, and he asked the guy, he said, in any given month you only have like 1% deliveries, and the guy said, yeah, and he goes, because there's a lot more open interest than there is gold reported in your vaults. And he said, what happens if 5% of the longs stand for delivery in a given month? He said, we're in trouble.
I asked Bart Chilton the same thing, and he just said that's how they do it in all the commodities.
What's that?
I asked the same thing to Bart Chilton, and he just said, well, that's how they do it in all the commodities.
No, Chilton, I disagree
people don't want a barrel of oil in their living room.
Any of the other commodities don't have the open interest in the contracts isn't anywhere near in excess of the available underlying, because when you buy a wheat contract, you're taking delivery of the wheat. You need the wheat, you're big food processor. So if I'm shorting wheat contracts, I'm going to make damn sure I have availability of wheat to deliver when ConAgra, calls me up and says, hey, I need delivery of those wheat bushels, right? I mean, in any other contract, the open interest is maybe 110% of the amount of underlying that's available to deliver. It's only in gold and silver where you see just these outrageous percentages of open interest in excess of the reported availability of the underlying.
And in the Western world, I mean, you look at the Shanghai Gold Exchange or the SGE.
Yeah, the Shanghai Gold Exchange. That's a physical exchange. That's why.
Yeah, exactly. This really historically, this isn't a physical exchange. It's cash.
Right.
For those metals. So
exactly. It's a paper exchange.
Complete conspiracy theory, Dave. Rob, can you straighten the score on this one, please?
I think Chris has a good point. The Shanghai Gold Exchange is more of a physical delivery market than Western exchanges. And it was funny, the LBMA came out, I don't know, a few months ago, came out and started threatening the Dubai markets because they're like a cash gold market, and they were threatening them, saying you're getting, conflict gold. And they were basically trying to get the rest of the exchanges to beat up on, these smaller but more cash for physical oriented, not future dominated markets, because I think it's a threat to the Western system and the way they have it run. If you look at the Western system, it's not only the COMEX, it's also London, their unallocated gold market,
right,
and how they play together, how they collude together to rig the market.
That's right.
And now they're starting to be threatened by the China. The 800-pound gorilla in this is China and the Shanghai market, but also a lot of all those other smaller markets that don't have the same scheme in place. If they all got smart and got together and said, let's form an alternative axis or alternative cartel to the Western market, I mean, you would see people flood over there. And in the documentation I did a month or two ago about this battle between the LBMA and the Dubai market, the Dubai market had added something like 800 customers in a month. So people are starting to go to those other markets because they're more liquid metal, and you can do it cash, and you don't have to put up with all this crap about all these futures and not be able to stand for delivery and all of this, like Dave said, all of this ridiculous futures on top of what's relatively small physical metal market.
I think this is part of a bigger theme in that all the monetary metals, the wealth is being transferred from west to east. And I think that's been going on for quite a while. It's accelerating. So yeah, I mean, at the end of this, the U.S. isn't going to be a dominant superpower 20 years from now. I mean, I don't think people realize how important a sound monetary system is for your economy, but they probably will in due course.
Yeah, well, I think so. And plus, I don't know if you guys knew, there's actually an Arcadia, in California. And at the rate we're going, and the rate California is going bankrupt, I was thinking maybe we can just make a bid for it in, like a couple of months, give them like 5-6 ounces of silver, say, hey, we want to make our own country here. We'll just run it as a free market. We could be like Switzerland. We don't even need defense, although I know a lot of people own guns. Dave, you can come there with your Smith & Wesson collection as our... Actually, no, we will not have Dave as the Security Council. But I think what you're saying is true, because that's what... Much as I love silver, I thought the whole Austrian theory was so beautiful and how easy life could be. And I remember as I was studying this, I'm like, holy, could this really be that easy to fix this stuff if you just got the three stooges of government out of the way? And, we'll take that step when we get there. But folks, I know I'm here with four of the sexiest men in the silver industry that probably have wives and dates and, elaborate. I can't even imagine what romantic activities Dave Kranzler has planned for tonight, which are not hedged on the COMEX by selling futures. So any parting thoughts or last bits of wisdom people should know about before you go do your thing? Mr. Kranzler, conspiracy theorist.
I mean, hopefully people in your audience started buying and stacking physical gold and silver a year ago, or maybe longer, because now it's going to cost you a lot more. Whether or not we get back to a condition of the market where Andy doesn't have trouble sourcing product to sell to people, it's going to be at a higher price. It's going to be at higher premiums. And I think at this point, if you're thinking about buying at least silver because it's cheaper than buying an ounce of gold, right? You probably might want to think about paying up for that premium, because a couple of years from now, you'll look back and you'll say, thank God I didn't, thank God I paid, $38 or $36 per ounce for my silver rolls, because now it would cost
premium.
What's that?
What do you mean the premium?
The $10 premium over the alleged spot price costs you 36
No.
bucks.
On my show, we talk about the price of silver. I don't recognize the spot price here.
I'm just doing it for ease of illustration, because people say, "Oh, well, silver
I
is
think
26 bucks. Why do I have to pay 36?" Well, you know what? 2 years from now, you'll be glad you paid 36.
Isn't 36 just the price?
Well, that's the price, yeah. But I mean, again,
so maybe
you're still
a leader
paying a
of
huge.
the silver.
If you try to here, let me put it this way: if you buy the silver one day and then try to sell it the next day, you're going to take an automatic $8 hit because that's the bid-ask spread.
I don't think that's correct. Andy, is that the bid-ask spread on a silver?
Roughly.
Eagle?
No, I would pay people minimum of $4 to $5 over spot minimum now on Silver Eagles.
Because I know yesterday when I looked at Silver Doctors, I think they were paying $250 over maybe.
Old man Kranzler, that's why I keep telling you,
But it's still okay. So
at Arcadia.
So you buy a roll of Silver Eagles from Andy, and you pay 30. Hang on. You buy a roll of Silver Eagles from Andy, and you pay 36 bucks an ounce for it, and then all of a sudden your kid needs braces, and you got to call him up the next day. I need to sell this roll back to you. You're still going to take a $6 hit.
$6, Andy?
I think it'll be less than that. I mean,
Andy, what is the current bid-ask spread right now?
Silver Eagles, the spread is larger on Silver Eagles because the premium is so high for the dealers to buy them, and the dealers they're not convinced yet that the prices won't come down, and if things don't get any better, they're not going to come down. Those premiums will start to narrow. But right now, hang on, I'll tell you exactly. Right now, hold on. Right now, I will pay on Silver Eagles $5 over spot right now, $5.50 for 2021s. I will sell, so that's what I will pay right now, and I'm spreading that out into the ether. $5 over spot on Silver Eagles. So premiums are.
What is your sell price on those, Andy?
The sell price right now is probably going to be around $9 plus. But here's the thing. No one's selling us anything at all. And in order for me to buy Silver Eagles for my supply, truth be told, even from the dealers, I'm probably paying closer to $6 or $7 over right now. I don't know, to be honest with you, Chris. No one's selling anything. $5. This hasn't been updated. I bet you it's probably even closer to 6 or 7, because I can sell Silver Eagles right now for $9.45 over and beat anyone in the country. But I do know that if I'm going to buy from any of the primary U.S. mint distributors in large quantities, I'm paying north of $7 over spot. If I'm buying from the public right now, my sheet says $5. My guess is it's probably higher, but I will guarantee that a minimum of $5 over spot. People who have been talking to me will know that I've been telling them not to buy Silver Eagles. I think the premiums are too high. You can buy other things like Krugerrands or Maple Leafs or Kangaroos where the spread is maybe 75 cents to $1. The whole Silver Eagle market is all goofed up right now, both bid and ask. And as one of only 27 U.S. mint distributors in the world, I love the Silver Eagle product. But when you have to pay that much to buy them, I'm very reluctant to recommend them. I'm not even buying them myself right now. Premiums are just too high. Even though I have them.
What do you recommend for people that want to get in silver and they're trying to maximize, maybe they don't have a lot of money?
Right
what
now,
product that you sell?
Right now, I can do 1 ounce silver rounds at $4.69 over spot, Buffalo silver rounds, which ought to be the best price in the country. I think the bottom line is, I do have Philharmonics. Yep, and they're going to be just over $5, $5 to $5.25.
That's what I would buy.
Yep, and I have right around the same price Kangaroos, Krugerrands, and Britannias. And but I've had to buy those months in advance, and luckily we still have a decent supply and have some coming in. But I agree. I think those are the best buys right now, because if you're paying basically $5 over for a round and $5 over for a Philharmonic, that is the discrepancy. Normally it's a spread of $2. Everything's goofed up. Silver Eagles are just stupid. And for me, Philharmonics, Kangaroos, Britannias, that's the sweet spot.
And actually,
I agree with that. And I think the Philharmonic's a better looking coin than the Eagle, gold and silver.
Mm-hmm. I agree with
A lot of people don't like coins with the queen on them. I get that all the time. And so the Philharmonic does not have Queen Elizabeth on them, nor does the Krugerrand, but the Britannia, the Kangaroo, and the Maple Leaf do.
It's symphonic instruments on the back. It's beautiful.
Yep.
It is beautiful.
So perhaps I'll insert one more last final question while we're all here. Has anybody, and I'll even throw an ounce of silver to one of our panelists if anyone can get the answer tonight. So far, nobody has. Has anybody figured out why the wholesalers are not taking delivery from the COMEX when there's an ARB on the board yet?
They probably are, actually. I don't know that for sure, but I'm sure they probably are, and turning them into 1 ounce rounds. But part of the problem also is that the distributors and the refiners are so backed up. When you buy the stuff and send it in to get rounds or bars made, you're waiting 8-12 weeks just to get it done. So it's a little bit more complicated than taking advantage of that ARB, because the time value in there kind of screws things up.
Kranzler, this Silver Eagle is sitting there saying, I want a new home. Can anybody answer that? Dave, please. He wants to go to Denver. Come on. Does anybody know?
I'm trying to lay my college basketball bets right now. What was the question?
You're so busy with that darn college basketball pool. Rob, he wouldn't even join our Ides of March Super Bowl box style pool where I have student loan, new COVID headlines, and also a break in the silver price. The darn Joe Grandy got the bond market collapse box. And I even offered 5 ounces of silver to buy the box from him, but he's playing hardball. And we tried to get Kranzler to play too, but he's too busy gambling on basketball. But can you answer why the wholesalers are not taking delivery from the COMEX yet?
Why the wholesalers aren't? Probably because they don't have
history to me. I don't know why they're not.
One's a little too hard for you, Dave. We should get call some of the other guests, see if
do you know the answer to this? Have you asked a wholesaler? Why don't you take
No, I just called. That's why I invited you on the show. I figured if anyone would know, it would be Dave. But
I don't know why they're not. Maybe
I got to call maybe I should call my broker at Goldman or JP Morgan, and they'll see if say, hey,
you know what, Andy, you should do that. You should call some of the wholesalers, and ask them why they're not taking delivery off the COMEX.
I think a lot of them probably are taking delivery off the COMEX. I will ask. I'll find out. I have 2 that I can call and report back on Monday. But one last parting thought, and I need to go run. I'm sitting here at my dad's.
Yeah, I got to run too.
But here's the thing. Anyone who's bummed out about the price falling, just remember, 90 million ounces delivered off of SLV, 50 to 50 million ounces delivered off of COMEX, and I don't know how many off of the exchange for physical off the London Metals Exchange. But when you put it all together, that's about as big of a delivery month as I've ever seen. The biggest money in the world is using the price to misdirect while they literally pull all the supply off of the exchanges. Look at what they're doing. And Rob has done an amazing job of talking about this, as has Chris. And so, here again, I think the price is a tool of misdirection. The big money is using it to pickpocket all the physical supply off of the main exchanges across the globe.
I concur.
Well, fellas, we're getting ready to wrap up here. I would like to extend a special thank you to Dolly Varden Silver, high-grade silver company with resources and great exploration potential in the British Columbia Golden Triangle, run by Sean Kunkun, who's actually, I believe, going to be making an appearance on the show next Monday, which I'm excited about to talk about Dolly. And also, he has a lot of experience in addition to running a company, also talking about finding junior miners, getting a 10-bagger in a good environment, a 20-bagger, things like that. So Sean on Monday, and thank you, Dolly Varden, for bringing this episode to us tonight. And folks, before we wrap up, any final thoughts? Dave, why don't you take it first? Any parting words of wisdom?
Well, I thought I already did that. I said, if you're thinking about buying gold or silver, you should do it now and don't let the premiums that you have to pay. And that's when you interrupted and said, well, that's just the price. And it sounds like Andy has as good a prices out there as any dealer that I've looked at. if
Why
not
do you
better.
think I've been telling you to call your buddy Yara at Arcadia at milesfranklin.com?
There you go. Call Yara.
Rather than reading your conspiracy theories and all that other stuff. Dave, I love you, brother. Thanks for being here. And we'll look forward to checking in with you again soon. If you got to go gamble on basketball, do your thing. I know it's tip-off time. All right. Look at him multitasking like a true pro. Chris, what's the final words of the evening?
So I'm actually going to add on to what Dave said. You should consider gold and silver as insurance. So buy some if you don't have any. I don't care the premiums. Obviously, try to get the lowest. You'll look back in a couple of years and be like, I'm glad I did that. $1 or $2 or $3 won't really matter. If you have some and want to buy more, you could invest in high quality silver companies. And then when the premiums get more normal, at some point, whether it's at $30 silver, 35, 40, you'll be able to buy more given the leverage. So that's about it for me.
Well, thank you for being here, Chris. Great to see
And
you.
that's actually a good point. I'd just like to add on to that. Sorry to interrupt.
You have final words. I knew it.
You know what? If you're waiting for the premiums to come down, the underlying price is going to be a lot higher before we start to see the premiums come down. So you're going to end up paying 36 to 40 or whatever anyway, even if you wait.
That's happened. That's true. That's very true. That's happened quite a bit.
Yep.
Mandy Sheckman, any final thoughts for the evening?
Yeah, I'm honored to be part of this group and of this movement, and in particular, as of late, Rob and Chris, your work has been incredible, and not to undermine your writing, Dave, and
you can undermine it.
I just the work that's coming out of this group and this movement has given me renewed vigor and hope, and it's wonderful to see the younger generation get involved in this, and I'm honored to be part of this. We're making history, and thanks for letting me ride on your guys' coattails. I'll always be here when you guys jump on. I'm gonna go wish my dad a happy birthday, but you guys all be well. Have a great weekend. We'll look forward to catching up with you guys hopefully real soon.
See you, Andy. Have a good weekend.
God bless you all. See you guys.
And with that, putting words in his mouth, but to directly put words in his mouth, well, you can still hear me. Dave, I think what he was expressing was that as great as Dave Kranzler's insight is in written document form, just seeing the legend on TV is irreplaceable. It's just like the true apex, the mecca. So I think that's what he was getting at. And Rob, if you have anything you'd like to leave us with tonight.
I'll just echo what Dave and Chris said. I think you don't worry about premiums, you just buy, because the premiums are there because there's a shortage in real market terms. And that tells you it's more scarce. If it's more scarce, it's supposed to be worth more in the future. And that's really, to me, a buy signal. It's not, I know people worry about premiums as they're shopping around, but it's a huge buy signal for the scarcity of silver in the market. I had a subscriber ask me the other day, we were sitting on a phone call, and they said, should I go gold or silver? And I said, either one, it doesn't matter, pick your poison. But I said, if it were me right now, just what I would do is 75% silver, 25% gold, because I think silver's a little bit more scarce now, at least in the open market, than gold due to its industrial demand. But I said, you can't go wrong either way. I mean, honestly, pick one. Do 50-50, 25-75, it doesn't matter, just buy.
I agree.
What I know is in 10 years, the fiat dollar is not going to be worth squat. And gold and silver is going to be worth a lot more, and it's going to hold your value like it has for 5,000 years.
It won't take 10 years for the dollar to be worth squat.
Although, Rob, if I just may suggest to be careful with that supply and demand conspiracy theory talk, especially while the CFTC is on the watch for social media, given that you, unlike the CFTC, you have a platform that people actually watch and listen to and care about the information presented there. You know, you could be, by sharing good, honest information, makes you the target of the US government. But that's why I love doing it anyway, right in their face. Kick us off YouTube. We'll find another way. Freedom will prevail. Go silver. Get out there. Have a great weekend. And we will see you again soon.
See you guys later.